So I'm going to start to draw in some more levels here. I'll just quickly recap what exactly, I was looking at. Again, naked chart here. All I have is a 20 SMA. I've got overnight session highs. And I've got overnight session lows. Okay. So overnight session lows, overnight session highs. Typically what I'm waiting to see is if we do confirm and break through. Now, this morning was a little bit tricky, right? A little bit tricky. We had a huge volume candle that came in at 6:45 Pacific Standard Time, broke through the 17,315 area and put in a high at 17,330. Okay. So it only went up about 15 points. Now, again, if you're a scalper and you're looking for those 5 points, you're looking for those 10 points, then maybe that's something that interests you. Again, if you're a type of trader who's expecting the breakout and then that to be the all-day move, more than likely a trader would have been caught in that typical situation. Now, for me, and again, I'm not a perfect trader by any means at all, right? I'm human just like everyone else out there. I make a ton of mistakes. It doesn't matter how many years I've been doing this. We're all human, right? So we all have emotions. So typically what I've gotten a lot better at over the past 4, 5, 6 years is if I do take something like that, right, where I'm looking at some particular level. Now, for me in the options world, it would be like pre-market highs and lows or previous day highs and lows. If that move gets confirmed, like immediately off the bell, and for me, immediately off the bell means by the time the bell rings to that first 30 minutes, right, that first opening 30-minute range. If something gets confirmed, I'm looking to get in. Again, first entry, not always the smartest thing to do. But again, if I do take the first entry, it's always a previous 5-minute candle as a stop. I'll try to size down a little bit. And I want to get green and get out. Because typically, again, not all the time, but typically that first move tends to get faded. Okay. That first move, if it's a short position, tends to get bounced. So it's almost like they're setting a trap and you can make money, but you have to go into that trade with the idea and with the understanding that you potentially are buying into or selling into a trap. So all you want to do is get in, get green, and get out. Now, depending on what you do after that, whether that's your day and you want to call it a day and you're good for the day, fine. Definitely, I would recommend that. If you are able to make something decent enough to where you can say, hey, you know what, I don't have to trade anymore today, that's great. Because again, the longer we sit here, sure, are you going to get more setups? Of course, 100%. But the longer you sit here and the more trades you take, you're spreading out the probabilities of eventually running into some losing trades that you can give back some profits or kind of go into, an emotional, FOMO chasing everything. And it could be the opposite. You could take the first trade, you can lose, you can wait for the second trade, and that's the second trade, third trade that brings you back into the green and positive. Now, if that's the situation, let's say, for example, you did take this move and you didn't get out and you went red. If you get into the next position, the next setup, and you manage to make money, that for me is always the underlying reason to stop trading on the day. I will never want to take, again, we're human. I get it. We're not going to be perfect. But if I start the day red and I manage to go flat or green, 9 times out of 10, I'm going to pull the plug because I'm looking at it as I caught a bad wave, my first 1 or 2 trades, and I was able to make something back. Now I have to be content with what the market gave me and walk away. And that's just how I play it. So the second move, I believe some of you guys caught it this morning, that 20 SMA short play. Okay, the 20 SMA short play, 6:55 in the morning Pacific Standard Time. We close underneath the 20 SMA. Okay, so we close underneath the 20 SMA here, and then we confirmed on the following candle. Now this candle ran all the way down to the low of day in the overnight session, and then actually broke through that 17,233 mark. Again, we were looking at the 60s as a potential price target. We were looking a little bit lower than that. And once it finally broke through the overnight session lows, you can see we've put on a nice little bit of a down move. Now, if you're looking at things from a technical perspective, right? We've got our first, I don't like the way this is so big. Change this really quick. We've got our first leg down, our first dead cat bounce, second leg down, and now our second dead cat bounce, okay? So typically that's what you want to see. Let me change these arrows. Leg down, bounce, and notice where we bounce. We bounce right back into overnight session lows, right? This is it's not rocket science, guys. You know, price action, does it get away from us sometimes and do things that are unexpected? Of course, right? But you know, so is life, right? Life is unexpected. Something random happens each and every single day in all of our lives. It's just something we have to deal with. But more times than not, patterns repeat themselves. More times than not, price action repeats itself, okay? So you get a big leg down. When you get that first bounce, right, and you'll know that it's a bounce because you'll start getting green candles that take out previous red, okay? That's when you know that it's a bounce. You're looking for some type of green candle to take out a prior red candle's high and make a push up. Now, when you notice the first bounce, it bounces right back into overnight session lows, okay? Notice that. Then once you take out the new low of day, could be a new short scalp position, okay? So if you're looking for the continuation play, you're looking for a breakdown through the new low of day. Once you get that, okay, once you get that, you have to be mindful. Getting in on the first breakdown, right? Getting in on the first breakdown here is like jumping out of the first or second story. What's the worst that can happen? You're going to sprain your ankle, you're going to get banged up a little bit, but you're going to walk away, okay? When you get in through the second low of day, which is the second leg after a bounce, now you're jumping out of like the fifth, sixth, seventh story of the building. You're not just talking about a sprained ankle. Maybe you're talking about a broken leg, a broken hip. There's going to be more damage if you're wrong, right? So the farther away you get from the original breakdown spot, the more mindful you have to be of sizing down. So if you are wrong, you're not taking as big of a hit, or you're taking profits quicker because you're understanding that I'm coming into this move, even though it's a new setup. I hope this makes sense. I want this to really sink in and make sense. Even though, let me mark this out one more time. Even though you're taking a short position through the second low of day, which is completely valid, and that entry is here, you have to understand that you're in the middle of an existing move, okay? So the farther away you get from the existing move that is already in motion, the more risk you're taking, okay? So just understand that. Now, once you get into this move and you manage to get green and get out, right? Because that's what you would essentially want to do on a continuation play. Then you're looking for the next dead cat bounce, okay? And again, how do you start to identify the next dead cat bounce? Well, that's when green candles start taking out prior reds. Makes sense? So you got your new low of day down here. The line's a little fucked up. Your new low of day here. Your continuation second dead cat bounce is here. How do you know that it's a dead cat bounce? Because green candles start taking out prior red highs, okay? Makes sense? Now, when you get into these type of bounces, you can do one of two things. You can use the low of day as a stop, which in this particular situation is going to be close to 40 points. So I wouldn't recommend putting on any more than a couple of micro contracts on something like that. Or you can wait for that 20 SMA play to confirm, which is the play that I just took. And that play is here, right? We close back over the 20, but be mindful, right? What do we have to be mindful of? That overnight session low, okay? Whoops. Be mindful of the overnight session low. Why? Because prior support, right? Prior support is what, guys? This is basic trading technical analysis 101. Prior support is always going to act as new resistance. Once prior support gets broken down, it's going to act as new resistance until, okay, stay with me here, until we break that prior support, new resistance, and then start to confirm it and then get a pullback down into it. Then that could be telling you that, okay, now we're turning this back into support, right? Or we're turning it back into demand. Again, support, demand, same thing, different words. Supply, resistance, same thing, different words. However you want to say it, you say it. Sometimes I say supply, sometimes I say support, demand, whatever. It's the same shit. But that's essentially what you're looking for. So where we're at right now is on this 20 play. If anyone did take this 20 play long here, I want to kind of, clarify something here. The 20 play candle that closed over the 20 SMA was an 18-point range. Now there's multiple ways. I'm going to zoom in. Oh shit. I'm going to zoom in here. Okay, I want to zoom in. There's multiple ways that you can take profit depending on your risk management. Okay, everyone's account size is different. Even if you're trading on prop firms, some people are funded, some people are on the verge of passing, some people just start a new evaluation, right? Some people are trading personal accounts. So depending on what your account size is, your take profit, your risk management is going to be different. My risk management is going to be different than yours. The next guy's is going to be different than the next guy's or the next girl's or whatever, right? Everyone's different. Everyone's emotional pain tolerance is different. But if the candle that closes, right? If the candle that closes over the 20 SMA is an 18-point range, some things got to be going through your mind immediately. Okay, so if you're looking for this play, some things need to be going through your mind immediately. One of those things needs to be telling yourself, it's an 18-point range. Do I want to risk 18 points? And if I lose, how much money am I going to lose? And can I afford to lose it? Make sense? So 18 points, I'm not the best at math, but I'll round up. Let's say it's a 20-point stop loss. If I trade one micro contract, I'm going to lose $40, right? So am I okay with losing $40? Sure. Am I okay with losing $80? Sure. Am I okay with losing $120? Sure, right? So I might put 3 contracts on the table. And I might be looking for something to, if I'm risking $120, I might be looking for something close to $100, $120 in return. Makes sense? And if you are looking at it that way, well, then let's go through the scenario here. 18-point range, entry should have been, once we confirm high prices of 17,219, which is here on the following candle. And this was a 27-point range. So if we're looking for around 20 points, and our entry, okay, our entry is over 17,219, it goes all the way up to a price of 17,240. So you got your 20 points here, guys, right? In one particular 5-minute candle. So again, if you were trading 3 micros, it should have been a $120 trade. Now, whether you got caught in the pullback, because it did pull back, right? If you got caught in the pullback, the question is why? Okay, that would be my question. Well, I thought it was going to go higher. Well, what is your take profit? Are you looking for that close to 1-to-1 on your take profit? Then you should have been out, right? I never want to hear a trader say, well, I thought it was going to go higher. It was working. Thoughts are great, guys. We've all got them. They're like assholes, though. We've all got those as well. So it doesn't matter what you think the price is doing. What was the plan and what was the intention going into the trade, versus there might be some people that are playing much bigger size. Let's say, for example, they're looking for this 20 SMA play and they're playing 2 or 3 mini contracts. Do you think someone who's playing 2 or 3 mini contracts is going to give themselves a 20-point stop loss? Of course not. You'd be potentially talking about $600, $700, $800 down in the negative. That's way too much risk. So a trader that's doing something like that might just be looking to catch 3, 4, 5 points, maybe $100 a contract, maybe $80 a contract, looking to make $200 or $300. So when this move starts to fly, you better get in, get green, and get the you-know-what out. You don't have time to sit there and let this thing wiggle. And if you're asking the question to yourself, well, if I was still in the trade, it would still be higher. Yes, but would you have been able to withstand the 20-point pullback? Probably not, right? Most people would say, I got stopped out on the pullback, and look at what the candle is currently doing now. It's currently back up towards the highs, right? So the thought process always has to be, what is my plan when I'm getting into the trade? The only other take profit that I recommend is the ATR, right? So you can do the ATR in one of two ways. Look at the ATR at the current time that the 20 play is setting up, right? Average to range on a 5-minute time frame. The current ATR was 25 points. So you could do one of two things as well. I can tell myself, if I get close to 20, 25 points, I'm going to take profits, which is aligning up with the 20-point risk that we're putting on the range on this candle, right? Or if you're more of a scalper, take the ATR and cut it in half. Cut the ATR in half. If it's 24 points, I'm going to take 12 points and I'm getting out of this trade. Winner, winner, winner. It doesn't matter any which way you drew it up. If you took this 20 SMA play, you should be a winner right now. If you're still holding this 20 SMA play, I hope it's because you already took profits and you're just holding a runner and have break even as a stop. Does that make sense? So again, there was definitely another entry down here. Again, we do go over this candle here. I'm looking for these cross candles, these indecision candles. I'm looking for hammer candles. This candle here, once green takes out red, we want to get in, and then you use a low of day as a stop. That's definitely an earlier entry here. An entry where someone could have held through the pullback. But again, you have to be able to identify that. And it's also risky because we have no idea, right? We have no idea, just because this confirms a previous swing high, that it's not going to do this. Come right into this 20 SMA and then start to come back down, retest it, and then break low of day. We have no idea. So it could be a risk. Your max pain would always be the low of day on a play setup like that. So it all really depends on what you were looking for. Hope that makes sense. Did anyone take that last 20 SMA play? You guys can put it in chat. Just looking now. If not, and you're not trading anymore, and you're just kind of watching price action, definitely something that you guys want to mark up. So that way you guys can study it. Take a screenshot of it, look at it, try to identify it, and then go over in your head, what are my take profits? Where would I get out? Well, what am I looking for on this trade? Because again, most of the times, a lot of traders get into a lot of trouble when they don't know what they're looking for, right? When they don't know what they're looking for, when it's just kind of like, I've got a setup, I've got a strategy, and I'm long now, or I'm short now, but you have no idea. You have an idea, like you have no idea of where you actually are going to take profits or stop out. You just kind of have this generalization of, well, I think I should be getting 1-to-1. I think I should get 2-to-1. Don't think anything, right? And don't get caught up in you need 2R return, 3R return. You need at least a 1R return or it's not worth it. That's bullshit. Because if you operate correctly, right, and you operate on a level of maturity, right, with your money, meaning you're not playing contracts that are way too big for you, you're expecting your overall win rate to be greater than 50%. You're expecting your overall win rate to be bigger than what you're going to lose this entire week, right? So again, I'm looking for a win rate of over 60%. Now, is that like ingrained in my head where I have to get 60%? Of course not. But when you look at your stats at the end of the week, you should be winning at over 60%. Why? Because we're taking trades where we're getting in on these momentums, these change in trends, these mean reversions, on these technical breakouts from hour candles or previous day levels or overnight levels. You're getting in on significance. You're not just chasing candlesticks because you're looking at one candle going up a little bit and coming down a little bit and you're guessing. You're expecting that win rate to be far greater than what you're going to lose, right? And because you're a seasoned, mature adult trader with half a brain on your head, you're going to be responsible. When you do make money, you're gonna lock it in and you're gonna shut it down. There is no ifs, ands, or buts about it. We cannot sit here and say, I'm up 200, I'm up 300, I'm up 400 today. Let me take this to 500. Let me take this to 1,000. Guys, the more you do that, I get it. Everyone wants to make those crazy huge days. Those days happen naturally, organically, not because we feel like we're in some type of groove, because we're overconfident. You start doing shit like that, you're going to get smoked. Time and time again, I've seen so many traders, they're up 400, 500, 600, and they've come back to say that they've lost it all. And not only lost it all, blew up an account. It's like, how? If you were trading real money and you had $1,000 in your account, now that's a little bit too less. You had $5,000 in your account and you managed to make $500 today. There's no chance, no shot in hell that I'm going to not only give up my 500, I may give up a couple hundred, I may go back to scratch, but there's no shot in hell that I'm going to go from plus 500 to down 5,500. Does that make sense? But there's a lot of people who are trading prop firms because it costs $20 to get started. It costs $50 to get started, whatever it costs you to get started. There's a lot of people who go up $300, $400, $500, $600 and end up blowing up and losing $2,000, $2,500 in a day from being profitable. That cannot happen. That is bad risk management. That is bad emotional control. You will never, 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 never succeed doing things like that. It's just not smart business. It's just not smart business. It has nothing to do with what you know as a trader or the strategy that you're using. At that point, it has everything to do with you not being in control of you. Okay. So again, I'm in like a big advocate of being in control of yourself, right? It's just like if I wanted to lose, 25 pounds. Well, I'm not going to lose 25 pounds by eating a half a dozen donuts and 2 dozen slices of pizza every single day, right? It's just not going to make any sense, right? There has to be some form of discipline, some form of a routine, some form of rules that you're going to stick to and follow. Life is hard. Life is hard. Trading is probably the easiest way, yet the hardest way to make money. Okay. You can make a lot of money in this business. Okay. People can retire off this. People can add supplemental income to this. People can add a side hustle income to this. People can, transition into doing this full time, as long as your account size is big enough to do something like that. However, it can be the hardest, most stressful way to do this. And trust me, I've been doing this full time now for 8.5 years. It's not fucking easy. Like it's really not. It's not about, the Lamborghinis and the fucking private planes and fucking 20 real estate properties that you own. And it's not about all that. It's a lot harder than a lot of people think. You can have great years because of the market. You can have great quarters because you're in a great market environment. But a lot of the times it's a lot of waiting. It's a lot of waiting. It's a lot of waiting. And it's you sitting back and picking your spots and then reacting to them, but then having the self-control to kind of like limit yourself. And just because the amount of money that you can make is infinite, doesn't mean that just the more times you click the button, the more money you're going to make, right? Like, it doesn't work that way. It doesn't really work that way. I've seen people have great weeks where they make $2,000, $3,000, $4,000 and then they're out of the game next week. It's like, what the hell happened, right? How can you run a business? I don't care what business it is. How can you run a business with money management like that? You just can't. At the end of the day, it comes down to money management. It really does. This 20 play is still in motion here after the pullback. Here's another situation I kind of want to show you guys. Like, what would be a situation where someone could still be in this 20 play, right? And I want to make it clear. Let's say, for example, you're trading 1 micro contract or you're trading 2 micro contracts. Okay. When this goes up 15, 20 points, sure, maybe you're up $40, $50, and then it pulls back and you go back to scratch, right? But however, it never takes out what? It never takes out your reason why candle's low. Oh, where's my drawing tool? It never takes out your reason why candle's low, right? It never closes below the 20, right? So technically, one trader should still be in this trade if you're trading small size. If you're trading small size. Now, again, if even if you are trading one micro contract, look at the facts. Look at the facts. The entry price should have been in, again, over 17,220. We've traded as high as 17,268. That's talking about 40 points. That's an $80 move on one micro contract. Again, the only way someone holds through all this 5, 10, 15, 20, 30, 30, 35 minutes is because they're playing small size. Because if you lose, what are you going to lose? You're going to lose 40, 50 bucks, right? I mean, how many trades can you lose at $50 before you lose your account? 20, 25 trades on a prop firm, right? With a $2,000, $2,500 drawdown. So again, you can afford to sit in this trade. You know, if your risk appetite is bigger and you're playing bigger size or you're playing mini contracts, then yeah, we cannot, again, I want to emphasize, we cannot afford to be profitable, give it all back, come back to break even, chop around, pull back. You know, we don't have that. We don't have that luxury. We don't have that luxury. You know, the bigger the size you play, when you're right, you get in, get green, get the fuck out. Right? Excuse the language, but that's just the way that I talk, and that's just the way that I am. It's the only way that I can put emphasis on things, right? So if you're playing bigger size, you're getting in, you're getting green, you're getting the hell out. You're not jumping back into the trade here, here, or here, telling yourself, well, if I still held, I would be making more money. No. You know, you had one opportunity. There's only one setup. The setup was a 20 SMA play. It went. Now, if you took profits or you got scared and sold, you don't jump back in. You can't do that. Like, you have to wait for a new setup entirely. Okay? I hope that makes sense. Like my best opinion or like my best advice for someone would be to kind of figure out what type of trader you are. Are you a trader that maybe wants to put on 1-2 micro contracts and you do want to sit in and hold these plays, right? Permitting that it doesn't stop you out for a bigger move, 20, 30, 40, 50 points. Great. Okay. That's who you are as a trader. That's your genetics. Okay. That's who you are. And that's what you need to do is you need to hold until you're up 30, 40 points or whatever the case may be, or get stopped out. Are you a trader that trades moderate size? Maybe you're trading 4, 5, 6 micro contracts. Then maybe you're getting out on the 20-point push-up, right? Or maybe you're selling 2 or 3, holding 1 to see if you can get a little bit more. Are you trading minis? If you're trading minis, when you get in, that entry better be right, and it better be right away, okay? And that goes the saying, you get green, you lock it in. It is what it is, okay? So you don't have time to sit through this. You don't have time to wait for that. You don't have time for none of that, right? The only other play that you could have maybe took was once we broke through the overnight session lows, we put in this high. Again, guys, I forgot who I was talking to this morning, but it doesn't matter the strategy, it doesn't matter the setup. I want you to look at this. Every time we're looking for that second entry, right? So let's say you missed a 20 play, okay? Or let's say you took profits on the 20 play, okay? Or let's say you didn't and you get stopped out, okay, great. What's the next setup? What would be the next setup on this chart? If we're looking at the dotted line and the dotted line, overnight session lows, overnight session highs, when we break through an area of supply, what's our supply? Overnight session lows. We put in the new high, okay, pull back, consolidate, do whatever, and then confirm the new high. Could have been an entry here once we took out the highs over these overnight session lows, okay? And again, you're going to play it as follows, you know, depending on your account size. Good. Nice work, Dante. You know, how much did you, I'm curious, how much did you take? Because again, there's slippage, there's fill times, depending on Apex or Top Step or whatever other prop firms are out there. How much did you take on that trade on 5 micros? So about 6 points, 7 points. And that's good work, right? That trade was what, less than 5 minutes? 5 minutes or so? Yeah. So even if you think about it, guys, even if you're playing like let me give you an example. Dante's playing a little bit smaller size, right? Well, 5 micros is not that small. I would consider small size 1 to 2 micros. But again, he's taking a 5 size micro contract and he's using the scalp approach, right? So getting in, getting that 5, 6, 7 points, but getting it quickly when the move works out. Guys, even in a scenario like that, right? Even in a scenario like that, I'll just use 5 points as an example. He took a little bit more than that, but 5 points as the example, you're making around $10 a contract times 5. That's a $50 trade in minutes, sometimes seconds, right? For sure, damn sure in one 5-minute bar. How many places can you go where you're making $50 in 5 minutes? There's not too many places out there, even though, you know, I don't know where you guys are at, but they just raised minimum wage here at fast food restaurants, and I think it's everywhere, but to $21 or some shit like that. It doesn't matter where you're working at. There's not a lot of places where you can go and make $50 in 5 minutes, let alone 1 hour, right? So when you're putting things into perspective and you're trading and you're looking at trades where you make $40, $50, $60, $70, I would not necessarily look down on that at all. If anything, you have to think about it. If you can piece together 2 or 3 of those trades, you're making $150, $200 daily in matters of minutes, where you're not really putting a lot of stress. Remember, guys, we're not doing brain surgery. We're not firefighters. We're not out here saving lives. We're not out here, you know, rescuing, you know, stray animals. We're sitting, most of us, behind a computer screen, hopefully not on your phone, but again, if you are, just be careful. And we're pushing buttons, and numbers are magically appearing on the screen. Okay, this is not life-saving work, right? So really put things into perspective. And again, I would rather do what Dante did for the rest of my life, where I come in and I can pick off a trade like this, make 40, 50, 60 bucks, and call it a day, and do that every day and just work on adding more accounts to my arsenal, to where now that $50 day is a $100 day, $100 day is a $150 day, $50 day is a $200 day. You see what I'm saying? And you're timesing that times the amount of trading days and an overall average and shit like that. That's where you can start to grow exponentially. But it's when people start to look at, right? When people start to look at, well, you know, I'm just using Dante as an example, not using him as this example, but there's some people that, let's say they take a trade where they make $50 and they don't feel like it's nothing, right? They feel like, you know, like there's more money out there for me to get. Their next trade, they go down, they lose 150 bucks. And now they're on tilt, right? Now they're, you know, they can't even stomach losing one trade. They just start pissing away at everything and all the good work that they've done. When realistically, what you need to look at is, if I can do an average of $40 to $60 a day, we're talking about an extra $200 to $300 a week, is an extra $1,000 to $1,200 a month. And I got a serious question for everyone here. You do not have to answer this, but did you even take out $1,000 from the market last month? That's my question to you. Did you personally pull out $1,000 out of your prop firm and put it in your pocket, put it in your bank account, go spend it? If you did not, why? Again, I use a lot of analogies because I'm stupid, right? I'm not that bright of a dude. I didn't go, you know, to some fancy college to learn how to do this crap. I have to use things in real life situations. So if I'm sitting here as a trader and I've got a little bit of a strategy, I've got an edge, or I know where, you know, if I catch a good trade, I can make 40, 50, 60, $80 on a trade. If I can do that more times than I can't, and I have not been consistently taking out $1,000 out of the market, why the fuck am I trying to make $1,000 a day? Why the hell am I trying to make, $1,000 a trade, $500 a trade? If I can't even take out $1,000 a month, does that make sense? So it's like you have to, you got to crawl before you can walk, right? You got to walk before you can run. I know that these are stupid age-old analogies, but it's just like in life. It's with anything. I want to lose 25 pounds. I'm not going to go out there and lose 30 pounds my first week. It doesn't make any sense, right? Things need to make sense. Okay, things need to make sense. Over time, that $50 winning trade, that $100 winning day, it will grow because you can, especially with prop firms, right? You can always add more accounts. You can always increase your size, right? But you have to start getting paid. If we are not getting paid, again, excuse the language, we are wasting our fucking time, right? We are wasting our time if we are not getting paid. This is not a business where I want to sit here for fucking 5 years and I want to learn how to do something. I want to learn and fail as quickly as possible. I want to learn what to do right and what to not do so I can start making money quickly. And forget the $1,000 in a month, $500. How many people cashed out a $500 check from Apex last month? A $500 deposit from Top Step last month? $500. How many people did it? The minimum withdrawal amount is $500 on Apex. Did you do it last month? You need 4 or 5 consistent trading days over $200 for Top Step. How many people withdrew $500 last month? If you did not, what the hell are we doing? We're trying to go for $500 a day, but we're not even able to do $500 a month. So when you start to break things down like that, things make a lot more sense, because what you can start to do is you can start to lean into those amazing trades that Dante just pulled, right? That $50 win, that $60 win, that $40 win, those days will start to add up. And from there, it's just about letting the days pass. Now, God willing, everyone wakes up tomorrow and the next day and the following week, time is not going to stop, right? Even when we do not wake up tomorrow. Last I checked, time and life does not stop. It continues to go on, right? Market's been here a lot longer than you and I have both been walking this earth. It will be here a lot longer than you and I both walk this earth. So what I'm trying to get at is time is not going to stop. We are the ones fighting with time. All we need to do is let time pass while doing the right things. And you're going to start to see that balance is going to start to grow over time. Sure. Are you going to take a losing day? Of course. Are you going to have a losing trade? Of course. But by managing your risk appropriately and being an adult and telling yourself, hey, you know what? If I'm willing to stop out at $50 profit on the day, $150 profit on the day, I've got to be willing to stop out at $100, $150 losing day as well. Why? Because I always want to keep my losing days in arm's reach, right? In arm's reach, meaning, I don't want it to take me 2 weeks to make back what I lost one day 2 weeks ago. I want it to be, because again, I don't know if my winning day is going to be tomorrow or the next day, or my winning trade is going to be the next one, or in 5 winning trades. But I always want it to be where what I lost on a trade or a bad day or a losing day, I can get back in 1 or 2 days max. So that way we're kind of always on this even keel. That's what kind of keeps your equity curve kind of slowly going up, down, but the overall trend is up. I don't want to see big fucking days where we make $1,000, but then the next day we lose 2,500. That's stupid. Doesn't make any sense. Because again, go back to what I was saying. How many of you guys are actually taking out withdrawals of 500,000? Now, again, if you are, right, once you do get to that point, because you will get to that point on that type of plan, and you start taking out those paychecks of $500, $1,000 a month, then yes, of course, the number is going to continue to rise, because you're going to be adding more accounts. You're going to be slowly increasing your size, and those numbers are going to gradually grow. But we've got to at least get through. We got to at least get through, the first one, right? We got to get through that first one. which for a lot of people is just even passing, right? Like you've got to pass. Okay. You know, there's a couple ways to pass very, very quickly. But again, if you're going to do that, we're going to size heavy, you're going to go, you know, all or nothing. You need to have like a starting bankroll. You know, I would recommend like $500. You're throwing $500 into a bunch of evaluations. You're trying to pass, you know, a handful of them. And then once you get into those funded ones, you're going to manage them very, very smart. Or you can buy a couple of them at a time, a few of them at a time, and kind of slow roll them where you're, you know, working on those those small days, but you're just going to let them stack. You might be closer to, you know, passing in 30 days and 45 days. Again, just because you don't pass within 30 days, here's another problem that I've seen a lot of traders run into as well, where, you know, you're $1,000 away from passing and they're going to renew you, you know, and charge you again for month 2 in 2 days. And then you try to hurry up and pass. Guys, pay the extra 35 fucking bucks and give yourself another 30 days to pass. Ensure that you pass. Right? There's no rush. Because again, what are you all in? $60 on 2 months? It doesn't make any sense, right? Like, why we're trying to rush. You know, if you were on a normal broker, guys, it's going to cost you more than $100 to even take one micro trade. To take that round trip, right? So you're trying to almost cheap out the system, versus if you had real money, you wouldn't even be able to trade like the size you're trading and put on the amount of day trades that you're putting on right now. So what's an extra 35 bucks? Doesn't make any sense. And of course, right, there's a difference on what's being sold, right? What's being sold out there. Social media, you know, Instagram, Twitter, you know, even Reddit, stock twits, YouTube, right? There's a narrative that's sold that, yes, you can make infinite amounts of money, which you can make a lot of money. You can pull big months, 20,000, 30,000, 40,000. You can. But one, you need the account size to be able to do that. You need the experience, and you need the emotional control, and you need to be on top of your edge, okay? Now, you lack any one of those things, you're not going to do it. And because I'm in the space as well, it's not my style of doing things, but I've been around this game a long time. A lot of that is more marketing than trading, guys. It's marketing than trading. Okay. So a lot of the, you know, you can do this, you can do that, look at me, is a lot of bullshit, right? It's a lot of bullshit. Again, it sells people, it gives them the hope. And then once you come into this business, you're looking around at the 4 walls that you're trading in your bedroom, in your office, in your car, on the phone, wherever you're doing this trading from, you're looking around and you're thinking to yourself, it's nothing like what these guys are posting on social media. It's nothing, right? So when you start to think about that, then it puts you even farther back than where you are. Because what you then turn to do is you then turn to look for a new strategy. I've got to have a new strategy. This actually almost came up, price almost came up all the way here to the overnight session highs, guys. Pretty close to it, maybe off about 15, 16 points. But when you start to, and that was a great bounce on that 20 play. Great bounce. What you start to think of is what you start to think of is, well, what happened to, you know, making, you know, $30,000 a day? You know, what happened to making, you know, being like this guy who I seen, or being like this girl who I seen, right? You know, or this person. And here's another thing, guys. A lot of, you know, it's like I hate to really pull covers on like a lot of this shit that goes on in social media, because for one thing, I don't have the fucking time. Like, I don't have the time to do a lot of this stuff, and like I don't have the energy, nor do I care, right? Because at the end of the day, who puts food on my table? Me. My trading. Who pays my mortgage? Me. My trading. Who pays my bills? Me. My trading. So I could give a 2 cents or a rat's ass of what other people in the space, educators, live streamers, marketers what they're doing, because it means nothing to me. But the reality of it is a lot of these other big time streamers are getting paid from prop firms to do promotions. They're getting handed free accounts to promote the prop firm service, this, that, and the other. They're getting paid to do this kind of stuff. So when you think about that, for example, I'll give you an example. I'm not going to give any names because that's not the business of what I'm doing. But I know a streamer, okay, who is paid well over 5 figures a month to stream live trades and be handed accounts if they blow up to continue running those streams. Now, let me paint a picture for you. If you see people out there who are making X amount of dollars and they're claiming that it's very easy or it's this or that or whatever, if you're making $10,000 a month, do you really give a shit if you're blowing up, 20, 30 accounts a month? Probably not, right? So again, be careful of who you're getting your information from or what you're following. Just worry about yourself at the end of the day, right? Worry about yourself, right? Like, I will stay in my lane forever and worry about myself, because at the end of the day, that's like, do I realistically think, you guys are all great people in here. I like my room. It's very small. It's very chill. A lot of good people in here. But do I really think that any of you guys care if I take a $2,000, $3,000, $4,000, $5,000 losing day? Maybe you're like, that sucks, but at the end of the day, life goes on, right? Nobody really cares, right? Do I realistically think that anyone gives a shit if I was to have a $5,000, $10,000 winning day? Why would you, right? Am I putting money in your pocket? No. Is that helping you feed your family? No. So all that kind of does is it just makes you want to chase what other people are doing, and it doesn't really work out. Worry about yourself. No profit is too small. No day is too small. If you're green and you did things correctly, guys, that's all you can ask for. All we're asking for here in this business is longevity. That's it. We want to have money to keep the lights on. What does that mean? We want to be here next week. We want to be here next quarter, next year. And if we don't have the money because we're racing to an imaginary finish line that is not there, you will not be here next year. You will not be here next quarter. You might have a great month. You might have a string of a few good months, but can you do this long term? And many people can't do this long term. Guys, we're pulling back a little bit here. Again, on these type of pullbacks, you can start to see momentum shift is when you get the inverse hammer candles, right? Or you get the hammer candles. Or you get the candles where you got equal wick on long and short side and a little small body candle. Typically that's letting you know that there's a short-term reversal coming. And then what I start to do is I start to look at where would be the short-term support, or where would be the short-term supply on that reversal. So if you're looking at my screen, notice the exhaustion candle, right? Again, people call these things different things. I'll call it exhaustion, inverse hammer. It doesn't really matter. But blow off top doesn't matter. Look at the blow off top. Look at the exhaustion candle here. Look at the inverse candle. Notice how, right? Notice how when red takes out a previous green, we start to pull back and lose steam. Now, where could we be pulling back to, guys? Remember the situation? If we reclaimed overnight session lows, we put in a new high. Now we're pulling back. Where do you think we're going to pull back into? Overnight session lows, as well as this rising 5-minute 20 SMA. So if we continue to pull back into this area and hold, right, and hold, look for that continuation back up to the upside. Okay. Now, if we break down completely, we pull back, we attempt a little bit of a bounce that never takes out the previous swing high, and then start to confirm a 20 play, then we could be coming back down to the bottom of the range, right? So those are things that like over time, as you guys are watching price, you can start to identify. Now, scalper, right, who's aggressive, who's looking for these types of plays, you're licking your chops. Exhaustion, inverse hammer candle. I'm going to use the high of day as a stop. What's my stop loss going to be? The range is 28 points. Great. I'll round up to 30. Every one micro contract that I trade, I'm going to lose $60. So if I want to lose $100, $200, I might trade 2 or 3 contracts on this particular play. I get the heck in, right? I get the heck in when drawing tool that. I get in when red takes out green, stop loss high of day, or this high, right? And I'm looking to take profits into where? The next area of demand. It's simple. When stocks break down, you look to take profits into demand. When stocks break out, we're looking to take profits into supply. So let me paint another scenario. If this pulls back and if it bounces and we take out that last swing high, where do you think price would looking to be tested? Overnight session highs and this high of day, right? So if that happens and you do take that trade long, you would be looking to take profits into overnight session highs, and then if we break high of day. Make sense? But again, you got to be looking for those type of things. If you're not, and you're just looking for 20 plays, then you're ignoring everything that's going on here. You're kind of waiting to see what we do at this 20. Do we bounce? Do we lose it? And then do we confirm? That's what you would be looking for. And again, guys, some people like the way that I try to teach, and some people fucking hate it, right? Like I get YouTube comments all the time that I rant too much, I ramble, I do too much crazy nonsense, that, you know, it's not that serious. It's, you know, find a strategy and execute it. But to be honest, guys, if it was that simple, how come everyone's not a millionaire, right? Like, Dante, why are you not a millionaire? LJ, why are you not a millionaire, right? You know, G-Man, Nate, like, why am I not a multi-millionaire, right? If it's that fucking easy, if it's just about technical analysis, if it's just about a setup with an edge, right? If it's just about a setup that, you know, hits at 55%, then why can't we just risk the same amount every single trade and just know that we're going to come out on top every single time, right? Like, because it's not that easy. It's not that easy. It's not just a strategy. It's really not. You know, we can sit here all together, right? And we can just look at today's price action and we can make up our own strategy. When this candle looks like this, go short. When this candle looks like that, go short. When we hit this price, go long. When we hit this price, go short. I'm sure we can come up with something, some type of risk management, some type of take profit. We can come up with something. Right? It's not the strategy, it's the trader. It's not the trader, it's the emotions behind the trader. It's the risk management. It's the emotions. So you have to tie all those things together. You can have a really, really great strategy and suck as a trader. You can have the best discipline and suck as a trader because your strategy's off, right? So it's like you don't need the perfect strategy, and you don't need to be the most disciplined person on the world or the most, you know, emotionless person on the world. You just have to have a little balance of all of them, right? Of all of them. You have to have a little patience. You have to have a little discipline. You got to have a strategy that works most of the time, right? And when I say most of the time, that's over 50%, 55, 60% of the time. And how do you know if it works over 55, 60% of the time? By back testing. You go through and you back test every day, hundreds of trades, hundreds and hundreds and hundreds and hundreds of trades. That gives you the confidence to know that, okay, this strategy, yes, more times than not, it hits. And then from there, you just control everything else. So just looking at price now, we had that little bit of a blow off top. Pulled right back down. Again, these dotted lines have not changed on my screen. It's not magic. It's not, you know, some illusion. Price generally gravitates back to that overnight session range. If the day's going to trend, we're going to get away from that range, long or short, and it's going to continue. It might backtest early, right? So for example, when we broke down early, might backtest and then trend a little bit more, right? Once it comes back into the range and it confirms, you're going to normally put in a high, back test again. If the market's going to be strong, then we're going to continue to push off higher. If not, then it's going to pull back a little bit more, sweep this area, and then put in some type of higher low and then start to come back. It takes out the entire low of day in whatever form or fashion, then obviously you're getting that third leg down. Yeah, so I mean, don't get me wrong, Dante, you can make, good money and kind of control the risk using one mini, but what happens sometimes is that when our luck runs out, because our luck always seems to run out in this game, we're in that trade where it's, we're in one mini contract and we just lost 28 points, right? And we lost $700 and we gave back everything that we made for the week or whatever, and then it causes us to start getting emotional about our future trades, and then things just go on tilt. I've just always found that until you build up a cushion and a padding enough to where you can take some of those bigger hits in the beginning, it's a grind. It's a grind, right? Like, so for example, like I trade option. That's where 90% of my bread and butter comes from. On options, I was trading anywhere between 2 and 3 contracts for a long time, like a long time, right? Where like my average win was anywhere between like 60 and like $200 was a good win. But again, I could take multiple trades. I could be in and out. I didn't have to worry about PDT, none of that bullshit. So, you can stack together decent weeks. And it took a long time before I got sized into where I'm at now, but you have to get comfortable. You have to build up the account. So where if you do take a few losses, you don't really feel it. Like you're not going to feel it because 1, 2, 3 winning trades gets you back in the positive. Entries are bad because of emotions, even when you have your levels. So again, if you feel that you're not executing trades because you're emotional, whether you're anxious, whether you're fearful, whatever emotion is going through you when you are ready to take a trade, even if you have levels, right? So like, let's say you have these levels. I know I want to trade this. It's because there's a lack of confidence in the setup or in the trade, regardless if you have the level, because of lack of trades. So the only thing that is going to get you to become more confident in your levels and in your setups and in taking these trades is to put yourself through a boot camp where you're trading such small size, win or lose, it has no effect on your emotions at all. And all it does is build habit because of repetition pattern. Okay, so you want to build habits of when I see my setup, I take my trade, regardless if I win or lose. I don't care about the outcome because it's never about the outcome. You're going to win some, you're going to lose some. The outcome has nothing to do with it. If you're fearful of the outcome before you get into the trade, it's going to cause you to miss trades, slip trades, chase trades. Make sense? So again, when I was taught how to trade, I came from trading small caps and biotech into large cap stocks, equities, and then moved into options. But when I was transitioning, right, when I was transitioning from small caps into mega caps, I couldn't afford to, buy 100 shares, 200 shares, 300 shares, 400 shares, stuff like that. I had to trade smaller size. But because I wanted to trade those stocks and I had to trade smaller size, I was looking for huge wins. I needed the stock to go up $5, $6, $7, $8, just for me to even make average money. And it was causing me to hold too long, to enter bad, to chase, to FOMO, this, that, and the other. So what I had to do, and what my, I guess, mentor, trainer, teacher, whatever you want to call it, what they had me do, and I've mentioned this before, is trade one share. When I get my setup, I trade one share. Now, mind you, I was trading things like Apple. I was trading things like, Facebook, aka Meta at the time. I was trading things, Microsoft, so forth and so forth. I could only afford to take one share. So imagine that if I had to trade one share, sometimes these stocks only go up 50 cents. They only go up 30 cents. They only go up $1. That means every winning trade I only made $1. But if I lost, I'm going to lose the same amount, whatever. Are you going to feel anything? If you guys are walking down the street right now, let me ask you a question. Let's say you go down to buy a coffee, you go down to the bagel shop, you go anywhere, I don't care. Go to the grocery store. You pay with a $20 bill, right? Whatever you bought was, $5 and some change. You get back $10, a couple ones, and a handful of change, let's say a dime, a nickel, right? If you dropped that dime or nickel without noticing, right, without realizing that you dropped that dime or nickel, and then once you got home and counted your change and you seen that you're about 15, 30, 50 cents short, would you care? Like, would you realistically care? And put yourself in this situation. If you went out and you bought something that, let's say, cost $10, but you only had a $100 bill, and when you got your $90 change back, you slipped it into your back pocket, and as you were walking away, it scooted up your back pocket, fell onto the ground. You got home, reach into your back pocket, $90 is gone. Would you care then? I think that most people would care about if they lost that $90 versus if they lost those few pennies. That's where position sizing comes in. And again, Kurt, going back to emotions on your trades, start small. Start small. Accept the risk. Once you're going to get into the trade, you're going to win, you're going to lose. You need to run a series of trades, not caring about the outcome. That's the hardest thing to do in the beginning stages. So if you're going to trade that one contract, make sure the most you're going to lose, what, $20, $30, $40. Make sure you have an account size where you can get through, 5, 10 trades and run it until it becomes so effortless and so boring that you start to naturally increase that position sizing. Same goes for people on the future side of things. Guys, start off trading one micro contract. Sure, maybe you only make $8, maybe you make $10, maybe you lose $12, $15. Guys, you can sit there and trade all day long, and all you can do is condition your minds to be able to be in these trades, right? Be in these trades. So once you do get to where you're sizing up into 2 contracts and then 3 contracts, you're not worried about the outcome because you've taken so many trades knowing that your strategy and your system works out more than it doesn't. So emotions get taken out of the equation. Now, again, trust me, you're always going to have emotions. You're a human being. You're going to feel emotions, but you're going to have emotions that are not going to bother you that much. It's not going to be detrimental to your trading. It's not going to cause you to do stupid shit. It's just going to cause you to be like, damn, market got me. That's it. The market just got me. Oh, well, okay, what's my next one? And it's going to get you to a point where when you win, it's like, cool. Where's my next one? Yeah, I mean Apex or Top Step, those are the two big boys. I would sign up an account with them. Either one, whichever one. Apex a little bit cheaper. And start off trading micros one at a time.